ကျွန်တော်တို့ရဲ့ MaximaxSolution အဖွဲ့အစည်းအဆိုရင်မြန်မာနိုင်ငံမှာရှိတဲ့နယ်ပယ်မျိုးစုံမှာလည်ပတ်နေတဲ့လုပ်ငန်းများရဲ့ဘဏ္ဍာရေးဆိုင်ရာမှာလိုအပ်တဲ့အကြံဉာဏ်များကိုမျှဝေပေးနေပါတယ်။တင်းရဲ့ကုမ္ပဏီများကိုလုပ်ငန်းအတွင်းပြင်ထိန်းချုပ်ကွပ်ကဲမှုစနစ်များဘဏ္ဍာရေးနဲ့ငွေစင်းဌာနဆိုင်ရာမူဝါဒများလုံထုံးလုံနည်းများချမှတ်လိုပါသလားသင်လုပ်ငန်းချက်ထွင်ရန်လိုအပ်သောရင်းနှီးငွေများရှာဖွေနိုင်ရန်ပြင်ဆင်ခြင်းများအတွက်အကြံဉာဏ်လိုနေပါသလားရင်းနှီးမြှုပ်နှံသူများနဲ့ချိတ်ဆက်ပြီးအရင်းနှီးရှာဖွေခြင်းများကိုဝန်ဆောင်မှုပေးနေပါတယ်M&A လုပ်ရန်သင်လုပ်ငန်းအားရောင်းရန်တခြားလုပ်ငန်းတစ်ခုအားဝယ်ယူရန် joint venture partner လက်ခံရန် shareholder အသစ်လက်ခံရန်လက်ရှိနေတဲ့ shareholder တယောက်ကို equity ပိုင်ဆိုင်မှုအတွက်ပြန်အမ်းရန်အစရှိတဲ့လုပ်ငန်းစဉ်များအတွက်လုပ်ငန်းတစ်ခုကိုတန်ဖိုးဖြတ်ခြင်းနဲ့အနာဂတ်အတွက်စီစဉ်ဆွဲခြင်းများအတွက်အကူအညီပေးနေပါတယ်။သင်ရဲ့ကုမ္ပဏီကိုအခြားကုမ္ပဏီတစ်ခုနဲ့ပူးပေါင်းပေါင်းဆက်လိုပါသလား။သင်အနေဖြင့်လုပ်ငန်းတစ်ခုကိုဝယ်ယူလိုပါသလား။သို့မဟုတ်ရောင်းချလိုပါသလား။အစရှိသောလုပ်ငန်းစဉ်များအတွက်အကြံဉာဏ်ပေးခြင်းလက်ရှိနေသောပိုင်ဆိုင်မှုဓနဥစ္စာများအပေါ်အခြေခံပြီးရင်းနှီးမြှုပ်နှံမှုလုပ်တဲ့လုပ်ငန်းအမျိုးအစားများအားရွေးချယ်အကြံပေးခြင်းသင်လုပ်ငန်းကို joint venture လုပ်နိုင်ဖို့မဟာဗျူဟာကျတယ်မဟာမိတ်များနဲ့ပူးပေါင်းနိုင်ဖို့ကျွန်တော်တို့အစအဆုံးကူညီပေးနေပါတယ်အဆိုပါဝန်ဆောင်မှုတွေကိုတော့စင်ကာပူနိုင်ငံမှာရှိတဲ့ဖော်ပြပါ business partner တွေနဲ့ပူးပေါင်းလှုပ်ဆောင်ပေးနေပါတယ်မြန်မာပြည်ရှိနယ်ပယ်မျိုးစုံမှာ professional များအတွက်ဘဏ္ဍာရေးဆိုင်ရာအသိပညာများတိုးတက်လာဖို့ကျွန်တော်တို့မျှဝေပေးနေပါတယ်လုပ်ငန်းဝင်များနဲ့အလုပ်ရှုပ်နေသော CEO များအဆင့်မြင့်အရာရှိများတို့ဘဏ္ဍာရေးဆိုင်ရာသိလိုသူများကိုလုပ်ငန်းခွင်၌ကောင်းမွန်တာလွန်သောဆုံးဖြတ်ချက်များချမှတ်ရမှာအထောက်အကူပြုနိုင်ရန်ရည်ရွယ်သောအချိန်တိုဘဏ္ဍာရေးသင်တန်းဖြစ်ပါတယ်မိမိလုပ်ငန်းအတွက်ကိုယ်ပိုင်နဲ့သူတစ်ပါးစီမှာချေးယူရင်းနှီးမြှုပ်နှံထားမှုမှရရှိသောရလဒ်များအားခွဲခြမ်းစိတ်ဖြာကြည့်ပြီးအရေးကြီးသောဆုံးဖြတ်ချက်များချမှတ်ရသူများအတွက်ဘဏ္ဍာရေးဆိုင်ရာနယ်ပယ်မှာမဟုတ်တော့လေအချိန်တိုတွင်မိမိလုပ်ငန်းရဲ့မဟာဗျူဟာများချမှတ်ရာတွင်ဘဏ္ဍာရေးဆိုင်ရာလိုအပ်ချက်များအားမိမိကိုယ်တိုင်နားလည်ပြီးလက်တွေ့အသုံးချလိုသူများအတွက်ဘဏ္ဍာရေးနဲ့ငွေစင်းဌာနများမြည်သည့်နယ်ပယ်ပင်မဆိုလိုအပ်သောဝန်ထမ်းများရှာဖွေနေပါသလားလစာဝန်ထမ်းတဦးချင်းစီဝင်ငွေကိုနဲ့လူမှုဖူလုံရေးအတွက်ကြားတင်ပြီးများကိုတွက်ချက်ပေးခြင်းများအတွက်အလုပ်တာဝန်များနေပါသလားကျွန်တော်တို့ကိုတတိယလိုက်ပါသက်ဆိုင်ရာရုံးများ၌စာရင်းများရှင်းလင်းပြီးသည့်အထိဝန်ဆောင်မှုပေးနေပါတယ်
ဆက်လက်ပြီး seminar မှာ drivers for valuation of your business ကို Mr. Kevin Lee စင်ကာပူကနေပြီးဆွေးနွေးပြောကြားမယ့်အစီအစဉ်ဖြစ်ပါတယ် The next speaker is Mr. Kevin Lee from Singapore. Ladies and gentlemen, he will be talking on drivers for valuation of your business. Please welcome Mr. Kevin Lee with a warm round of applause to the podium.
Mingalaba. I apologize because after this, the rest of it will be in English because that's the only Myanmar word I know. Anyone does not understand English? Okay, so I guess that's all right. The other challenge I have when Mr. Tangun and Maximax asked me to do this presentation is, he said, you're all very experienced professionals, business owners, CEOs and all. And he wanted me to tell you how to drive valuation of your business. I don't know how to because all of you are so experienced. So I think I'll start with a story. Sometime back, one of our clients actually asked us to help find investors for his business. He wanted to sell out some of the business and look for an investor to invest in his business. This was his business. He was making toilet bowls, installing toilet bowls for buildings. As you can see, it's not very interesting. It's not very exciting. There's no technology. It's not a hot sector like what the panelists talked about before. So we didn't think that we would get a very high valuation for such a business and all. Well, as we spoke to this investor a bit more, we decided to actually position them like this. So this investor, the business, we meet the daily essential needs of professionals by providing safe, resource-efficient products, and we enjoy high margins and experience continued growth, benefiting from the increase of commercial space in Asia. As you can see, all of you are professionals here, but I'm sure by now at 4 o'clock you have gone to the toilet at least 3 times already. So it is an essential need for your business, right, for you. At the same time, our client actually installs toilet bowls and bathroom fittings, sinks and all for hotels, commercial buildings, offices and all. If you were an owner of such a building and you were getting someone to install the bathroom fittings in your building, you want it to be water efficient. You don't want to spend too much water. So again, that was something that our clients' customers were very interested in, that it was resource efficient. At the same time, because we were looking for investors and investors want to see growth, our client was actually enjoying a lot of growth because there were a lot of new buildings coming out in Asia. Myanmar, for example, every time I'm here, I see new buildings, I see a lot of construction. As there are more buildings being built, our client will have more sales as well. Every building will need a toilet, no matter whether you're a hotel, an office building, or even a residential building. So because of that, we actually managed to help our client get an investment from a private equity firm. That investment, the valuation we got was 23% above what he expected the value of his business to get. And we were also able to value his business based on his forecast earnings, future earnings. As you know, a lot of times when you try and value your business, people look at the past, look at what you did last year and the previous year and all, but investors or buyers of the business will say, I don't know what you'll make next year, so how can I actually value your business based on next year's performance and the performance 5 years from now? But we managed to do that. Why? Because with this business, we were able to show that he already had secured contracts for a lot of businesses in the next 5 years. So there was actually sure revenue coming in for him. There was sure cash flow and there was profitability. And we were able to factor all that into valuation. So today, in terms of what drives valuation, to share with you, I think I'll focus on 2 parts of it. One of it is strategic positioning. As you can see earlier, it was a very boring business in toilet bowls and all, but if we tell the right story, we can actually get good valuation for the business and a good price if we're looking for an investor. The other part of it is also the financial data. Valuation is very much a financial thing. Your valuation always has a basis looking at the asset value of your business, looking at your revenue, profits and all. So again, how do we actually look at these things to actually drive the valuation up for your business? Because I presume all of you want to have a higher value for your business, right? So just a quick question. When we talk to investors about valuation, what do actually investors want when they invest in a business? Anyone? Think essentially they just want money, so it's about returns. Every investor will want to realize a higher valuation for his business than the cost of his investment. Earlier on, I think Mr. Tangun talked about IRR and ROI and also on the panel. So if you look at ROI, you're looking at whatever the investor invests in a business, the cost of its investment, and the value of the investment when it sells IPOs or realizes a business and hopes that this is more than one. So simple formula from any textbook, you have got the value of the business over the cost of investment. So with these two things, that's why we all want to know the value of our business so that we can have a meaningful discussion with investors. Or if we are investors ourselves, we can have a meaningful discussion with the companies we are planning to invest in. So if I can ask, valuation, do you think it's an art or a science? How many of you say it's an art? And how many of you say it's a science? I think maybe the rest of you are still full after lunch and waiting for coffee. Essentially, for what we think is it's both an art and a science. It's probably more a science, more of an art, about 60% and 40% of an art, of a science. In terms of the numbers being used, a lot of it is your historical numbers, your profits, your revenue, your asset value. You can calculate that and you can't change that very much. But there's also some assumptions being used when you're trying to forecast your business into the future and all. And because of assumptions and a bit of estimates, there's a bit of art there. When you compare your company versus other listed companies as well, you choose certain companies, you look at certain PE ratios or EV/EBITDA multiples to value the business there. So in terms of choosing that, there is a bit of art and a bit of assumption being used there. But don't quote me, this pie chart, there's no science in this pie chart. So it's not a 60-40. I'm not saying that it's a science, it's 60-40 about this. It could be 50-50, it could be 70-30. But what I'm trying to say here is that valuation has both a art part of it where we worry ourselves about assumptions, and also the other part of it is it can be calculated based on the financial data that you have, the science. If you talk to your bankers, your accountants, and if you look at your textbooks, I think these are some of the typical ways of valuation methods, common valuation methods. You have PE multiple, EV/EBITDA multiples, very common. You have asset value, asset-based method to actually value a business based on net asset value. And also, I think some of you are familiar with DCF, discounted cash flows, where we look at the future income of a business and discount that to the current value of the business and have a valuation based on that. So to take price equity PE ratio as an example, what we do is we look at multiples of listed companies out there, similar to your business. We look at companies that are listed in Singapore or Hong Kong, and let's say it's 12 and 12.5 times. Multiply that with your business, your earnings, say it's about 23 million. And then from that, because you are a private company compared to listed companies, we have to apply some sort of a discount to that. That could be 25 to 40%, sometimes up to 50% as well. And on that basis, that's why there's an art part of it, because we can't come up with a fixed number. It's actually based on a bit of judgment there. If you can see here, there are some numbers that are market data, because you will look at companies out there listed in Singapore, Hong Kong, and you have some numbers that are internal to you, which are your company's earnings, your last 3 years earnings, last 5 years earnings, 2018, how much revenue you make, how much earnings that you made there. So we can sum this up by there's some external data that you will get from the market from listed companies and some internal data from within your company, which is your revenue, earnings, and your cash flows and all. And you look at, when we look at PE multiples or EV/EBITDA multiples, these are numbers coming from the market, from the stock exchange. Even if we work out a discounted cash flow and we use a discount rate, that's also based on some market data there. So the question is, which of these do you think you can control? Can you actually control how the market values a listed company? I think most of us can't, because the price is determined by the market. So on that basis, I think when we talk about driving the value of your business, I think one of the key things to actually look at is internally look at the performance of your business and all, right? So in terms of that, we help to drive the performance of businesses. We try to drive the performance of businesses and all. We look at increasing revenue for the company, improving the sustainable profits for a business, the cash flows there. What is the value proposition of the business? What drives the business? What are the business strategies? So when we can do that, that actually also sells the growth and the value of a business, the growth story of a business, and that drives valuation up. Now, I'll just continue based on that, because I think if I do this, I think all of you will have a late tea break. So I think in terms of this business, I think what we can do is we'll sort out the slides, and if you need that, I think the organizer at Maximax can actually email this to you for your information. I do also have some material at the end that you can download as well, so that will help you, right? So if you can bear with me, I know the slides are a bit messed up. I didn't know that. I can't see that very clearly because the only screen I can see is at the back of the hall, and I can't see these two screens here. So in short, I think to drive the valuation of the business, I think we should all focus on the internal performance of our business, looking at our own revenues, looking at our own profits and all. I think it's not so much about trying to find external sources to say this company is something we can compare ourselves with. We should look at a PE ratio of 40 times or 50 times. But more importantly, we should look at the internal performance of our business. But to be able to do that, you also need to sell that story to your investors or whoever you're speaking to. And to share with you a quote here is that you can't sell anything, meaning your business or your company, if you can't tell a good story. This was taken from a quote from someone who runs marketing at General Electric. She was the vice chairperson of General Electric as well. Right, so I know you can't see this, but some of the areas that investors look at, this one. Okay, it's working right now. I'm not sure if it's Myanmar wordings on top or it's just gibberish, but these are some of the things investors actually look at to value your business and all. It looks at the industry that you're in. It looks at management team, because investors actually rely on management team to run the business. It also looks at what strategic advantage your business has and the plans that your business has going forward. Investors will put money into the business and hope that you use this money to grow the business there. In terms of industry, we should look at trends of the industry that you're in. Sometimes some businesses, I think as Mr. Tangun shared right at the beginning, whether this was a sunset industry or sunrise industry, we see a lot of changes in trends. Take for example, as I stayed in this hotel, most of today and some part of yesterday, I noticed something very interesting about this hotel. It is very, very, very environmentally friendly. Have you seen a plastic bottle around? All the water is in glass, is a jug and all. It's the same for the rooms as well. I'm staying in this hotel. If you notice the pens that you're using on the table, they're not plastic pens as well. They're all made of paper. I think increasingly in terms of a trend of the industry, people are more environmentally conscious and all. And so if you are in a business that produces a lot of plastic, there's two things you consider: whether your business is being disrupted and changed, or what you could still change your business and transform your business to remain competitive there. Eventually, we still need plastic. We can't do away without plastic entirely, but it is slowly moving away from some of the consumer users that we see on a daily basis, like plastic bottles and pens and straws. In terms of the management, we look at the experience of management running the business, and that drives valuation. It looks at how that management has actually been able to grow the business historically, how it's got plans, and how it can remain competitive and communicate its value to shareholders and its market. Advantage, what is the specific advantage to your business, whether it is a cost advantage that you have, or it's a case that your business is able to have premium products and you are able to charge premium prices for your products and all. Also, in terms of the plans of the business, because the money going into your business, or if any investor is looking to value a business, we always try and value this on a future value. So what are the future plans of the business, where that money is being spent, invested into, the capex that is required in the future, and also in terms of whether this growth is sustainable. So looking at this more specifically, I think you can see this. What investors have a lot of opportunities out there to invest their money. The question is, why should they invest in your business? So the question to ask ourselves in driving the valuation of business is, what makes your business more attractive than your competitors or the other opportunities that investors can invest in? Right, so some of the competitive advantages, we've actually helped our clients position themselves well to get a higher valuation. We're able to say that they have a good value proposition, they have identified the needs of their customer, and hence deliver a premium product or a product that actually suits their customer. And because of that, they are able to get sustainable margins in their business. They continue to generate cash flows, and that makes their business more competitive and more compelling and more attractive than other businesses. A more attractive business will actually definitely have a higher valuation compared to others. Looking at management, as I said, most of the time when you invest in a business, or an investor investing in your business, is looking at the management, is relying on the management team to continue to run the business. So some parts there is looking at the ability, the experience of management, how they have run the business previously, how they have grown the business, and can they actually continue to grow this business in the future. It also looks at the management ability to communicate and sell its business, not only to you as an investor or to an investor, but for a business to grow, it means that the management of the company has to market its products or its services to its customers. So that's a huge part of communication there. One problem we always find with companies trying to get investors is that a lot of times between them as management and the investors, the interest is not aligned. As in, they expect very high valuations for the business, and because of very high valuation of business, when the investor comes in, they only have a very small percentage of the business. So investors will always find that, how then do we align ourselves with management? What is management's incentive to continue to grow the business? So that's where, to drive a better valuation or more meaningful valuation in your discussions with investors, is also to look at the alignment between management and investors, whether management and the founders of the business are also invested in that business, and if their compensation is based on the performance of the business, right? So when we look at valuing a business and how to drive it, we consider the investment positioning of a company. So we sometimes have to ask ourselves these questions before we actually prepare our valuation, before we actually even start talking to investors. What are we actually good at? What's unique about our business? Why are we good at that? What are we doing to manage the risks that we are facing within the business? And because we have certain parts of our business that is risky or weak, how are we improving ourselves in those areas? I know not all businesses are perfect. I will cover that a bit later to talk about how to manage your business if your business is not perfect. A few slides down or further on. Right. So to give you an example, this is again is a client that we work with. It's not toilet bowls. We don't just work with clients who do toilet bowls and bathroom fittings. So this was a FMCG client, consumer goods. They distribute beer, chocolate, milk, drinks, soft drinks and all in Indonesia. But because you know this is a business where it is very, very competitive, the margins are very low because this business does not manufacture the products themselves. They actually rely on big brand owners like Pokka, F&N, Danone to actually supply them with the products. Then they actually distribute and sell that in Indonesia. So because of that, it's competitive, the margins is very low. Again, it's not very attractive if you're trying to value yourself and get out to investors. So one of the things which their previous consultant before we came in said that you should just say that look at the relationships that you have with the brand owners and focus on that. But we came and said that I don't think that's quite enough to actually drive valuation for the business, to just say that we have long-standing relationships with our brand principals or more than 5 years, because how does that say anything towards the business? How does it make that business more valuable compared to others? At the end of the day, you will remember that earlier on, investors want a return on their business and they are concerned about growth of the business. So although our client has got very long-standing relationship with the brand principals, with the beer manufacturers, with the soft drink manufacturers, with Procter & Gamble and all which are distributing the products, we demonstrated that the relationship with the principals was so strong that the brand principals were actually giving them more and more products every year. So their portfolio of products being distributed was growing because they were doing very well, and because of that the sales was improving, and we could actually draw a link between the value of a business back to the numbers, the financial data, and we could show growth in terms of revenue, we could show growth in terms of margins, we could show that they were engaging very well with the brand owners such that they can collect the data, and products that were of lower margins, they were recalibrating, they were taking out some of the taking off some of the products that had lower margins and not distributing that. So they were providing a lot of the data to the brand principals, and all this shows the growth of the business, and all this shows continued revenue and earnings for the business, and that's something investors are looking for, and that's something that is factored into valuation. Again, because of this, we were able to get a higher valuation for our client for this business that we were asked to help with. As I said earlier, no business is perfect. Like a bowl here we see it's got cracks, but that doesn't mean that the bowl cannot be used. You can still put in noodles or soup if you want to, but of course it doesn't look very nice. Now when we talk to some new clients, they always say, when we ask them, so what's the risk of your business and who are your competitors? Sometimes people will say that there's nothing wrong with our business is perfect, it's very good. We've got no competitors, we are very unique there. But as we all know, that's not true. No business can be so perfect in a way that you have no problems. Just like my business ourselves, we are not a very big firm. We're not McKinsey, we're not PwC. But what we do differently, and that we're not perfect in that sense, but what we do differently is we work very, very closely with our clients and be able to help them. So we think very differently. As you saw earlier, we've taken on clients that are in industries that are traditionally not very exciting, and we still manage to drive their valuation up for them and have meaningful discussions with investors on behalf of our clients. So as examples, some of the situations we may see in companies that are not perfect, we have seen companies coming to us saying that they are greenfield, they have not started construction of their mine or their business, but they have just secured a license. And there's no profit to show. If there's no profit, how do you have a valuation? So in this instance, sometimes we actually look at whether this business actually has got contracts being signed already. They have got orders, pre-orders taken. So once the construction is complete or when the project is finished, they can start generating revenue. At the same time, we see businesses that have got low margins and low sales. Low margins does not mean bad. Low margins does not mean that when you see a company with low margins, that means that your valuation is low. Even with low margins or low profits, it could mean that the revenue there's a huge volume in terms of revenue. So even with low margins like a consumer goods FMCG distributor, it is still of value and it can still drive value up. We also look at certain other situations here where the business has got some parts of it that are not quite liked by the investor. Let's say there's an investor is not interested in the real estate for the business and all is looking more at the operational parts of the business. That holding of some assets may actually drive the valuation down for the business. So because of that, there is some need to actually restructure the business and carve out some of the assets that would actually hinder or bring down the valuation of the business. So in doing that, we have taken real estate out of some of our clients' business to just focus on the operating assets itself, because some of these buildings that they have there are underutilized. That means they are empty and all, and this because of that they are in area, and also because they are located in areas that are not so attractive, the valuation actually comes down and the asset base is larger there. So we have to do some restructuring for these businesses. Some other examples that we have on how we've actually managed companies that are less than perfect by having some mitigation to some of this business, and this helps in terms of driving valuation up. So why is this important and relevant to you? You may be interested to know that there is actually a lot of investment money looking to invest in Asia, in ASEAN. I think that's why this conference was organized, and that's why there was an earlier panel on hot sectors. There's nearly $380 billion of PE and VC funds as at the end of 2018. So a lot of money waiting to be invested into ASEAN. Just 2018 itself, just last year, we have got 380 deals completed, of which they were worth $14.1 billion US. Some of you may say these are very large deals, which was true. In last year, we had big transactions like Gojek in Indonesia, ride sharing. We also had companies like Global Logistic Properties and all. And yes, the $14 billion, a lot of it was actually from the large companies and the large deals. But even if we exclude these large deals, nearly 40% of them were actually in the small to medium size range. So these are small to medium sized cap companies which are 500 million or less, and some of the small cap companies are even 20 million less. So there's no reason for us to say that there is no money out there from investors. There is quite a lot, and their investors are still looking at small, medium-sized companies, SMEs, which although I don't understand Myanmarese, I think a lot of that discussion earlier in the earlier panel was talking about SME businesses and all. You may also say that, but most of this money is going to Singapore, because yes, Singapore is a financial center, it's a financial market. Not because Singapore has got a lot of manufacturing, a lot of good companies. Actually, the investments that have been made into Singapore, those companies, their businesses are located outside Singapore. It's just that their headquarters are in Singapore, and hence the investment is recorded into Singapore. But increasingly, you see this number coming down. Even in last year, more than half of it is done outside Singapore. The biggest countries that have seen a lot of investments in 2018, apart from Singapore, are Vietnam and Indonesia. Myanmar, not so much. Maybe a lot of them are not reported. But if there's not so much, it doesn't mean that it's not good. It just means that there is an upside. There's potentially more deals there. Singapore has seen a lot of investments going in. The percentage is likely to come down. Now with all this money you see out there, the question then, do we actually think that getting this investment is actually easy to get, and there's a lot of money, so we can get it all quite easily? It's not true, and that's why we need to be very focused in terms of our valuation and be able to support the story and support our valuation there. Because companies, when they invest, angel investors, based on statistics, they look at nearly 50 transactions or 50 companies before they invest in one. So if you're a company talking to angel investors, you may have a 1 in 50 chance of securing an investment. So the idea here is, if your valuation is there and you want to drive it up, we should be able to support that valuation better, and that will increase your chances of getting an investment. Now, apart from business angels, if we look at professional investors like PE and VC funds, the percentage, the probability given goes even lower. They look at nearly 400 over deals before they actually identify one that they will invest in. Just ourselves as a firm, we do M&A. Just last month, myself, I've got calls from at least 9 companies who are asking to raise money already. So there are a lot of companies out there looking for funds. The question is then how to actually sell a story and to drive the valuation of business such that it makes sense to attract investors there. Earlier on the panel, I think we talked about some of the industries that were hot sectors. I don't understand most of it, but I hear some discussion around education. I hear some discussion around consumer and financial sector. Based on what we know and based on what we see interest in terms of Myanmar. These are some of the areas that investors may be interested in. Not to say that the other sectors are not interesting, not to say that the other sectors are not hot, but we've seen more interest in these areas. Consumer goods, because as professionals here, your disposable income is higher. Your GDP has also been growing very, very fast. So because of that, there will be more spending from the average working professional on consumer goods like food, groceries, personal care products and all. So this is particularly attractive to investors to capitalize and on the growth of Myanmar. Manufacturing, Myanmar is up and coming as a manufacturing base. It's grown nearly 7 times. It will grow about nearly 7 times in terms of the GDP contribution from 2010 up to 2030. We've seen that kind of growth in China when it was a low-cost manufacturing base, but it's of course becoming more expensive, and a lot of global companies have moved their manufacturing away from China into Southeast Asia. Myanmar is potentially positioned to enjoy that growth there. And as I mentioned earlier, and as I see every time I'm here in Myanmar, there's a lot of construction and there's a lot of infrastructure being built. So again, potentially investors are keen in these sectors and these areas. I'm sure there are others that were hot sectors that were discussed in the panel before that, but this was just an example of areas that we've seen being interesting there. For our business, we're based out of Singapore, but we do some work in Myanmar together with Maximax. We advise companies on M&A. We help them on investing in companies, so we do both buy-side and sell-side advisory. We help in terms of improving the performance of a business, and as we said, it's important to actually look at the performance of a business, because the performance of a business is one key factor that drives valuation of the business. So we've actually helped companies improve their profitability. We've helped companies improve their revenue and their source of revenue. We've looked at a business model and helped them to have stronger business model through developing better strategies for them, developing different pricing strategies for their products there. Finally, we also help companies by providing CFOs, interim CFO businesses. So in short, this is what we do. I thought I'll share this with you. Instead of just taking a copy of the slides and photographs and all, we actually have a book, an e-book on how to position your business better to attract investments. You can actually get that by scanning that QR code there. Right. I'll bring this up a bit later again, but just to finish off, I'll bring back the QR code. But just to finish off, valuation of a business, to drive it up, I think it's about demonstrating the performance of your business, driving how it's growth, driving the growth, because that's what investors are looking for. And even if you're doing that, I think the key thing is to be able to communicate and position your business well to investors there. So I'll end off with this quote here. You have to tell a story of your business, but if your stories are just about your products and services, I think that's no different from a brochure. So we should look at other areas of telling a better story, supporting the data, supporting your business and its growth, and that will support and drive the valuation for your business. So with that, thank you for your attention. I'm happy to stay in touch, so I'll leave the 2 QR codes here. One is to connect with me on LinkedIn, and the other one was for the investment positioning ebook, which you can read. Thank you.